I think it's safe to say nobody expected this Tesla stock news today. Tesla is increasing Model Y prices in Canada by $1,000 next week. Tesla raising prices? That's on nobody's radar. I mean, if this was Vegas and there were voting odds on whether Tesla would raise prices or cut prices next, you would get a fat payout on this news because it's not expected at all by Wall Street. Now, of course, I know what some people are going to say. Canada is a small market for Tesla, and yes, you are correct there. It's not a huge market. The US is the most important market. China is the second most important market, quickly becoming the most important market. And collectively, Europe is the third most important market. Then you have Canada. Then you have Australia, South Korea, hopefully Japan here in the not so distant future. But I think this is a sign of, well, more price increases to come in especially the US. Take a look at this. Currently, if you finance a Tesla, a Model 3, I ran the numbers, if you put $4,500 down, the total financing amount is about $36,000. With an 84-month term loan, the longest term you can get, the cheapest payment you can get by extending that term out, the interest rate on that is about 7.5% right now. The estimated payment is $723 a month. With the same information plugged in, if that interest rate was just 4.5%, your monthly payment would be $501 a month, effectively saving you about $222 a month. What's even more shocking, at 4.5% interest rate, 84 months for the term, Tesla could charge $52,000 per vehicle or per financed amount, and you would have the same payment as you would today if you financed $36,000. That payment $723 and the payment $723 for $36,000, but with a 7.51% interest rate. You don't think when the Fed starts to lower rates, if the economy does weaken a little bit more from here, Tesla's not going to raise prices at all? Talk about something that's not priced into Tesla's stock at all that will be coming here over the next 12 to 18 months, and that's Tesla raising prices. And yes, I know what a lot of you guys are going to say. Tesla's not going to raise the Model 3 to $52,000. Of course not. But Tesla may indeed raise the price to $40,000. That would put your monthly payment still at $557 if your interest rate came down to 4.5%. Maybe they raise that to $42,000. That would put your payment at $584, still a lot cheaper than today's $723 you would pay for this same loan. So you're saving money, but Tesla's also getting now an additional $6,000 per vehicle. So you save $140 a month. Tesla gets $6,000 more on the purchase price of your Tesla. It's a win-win for everyone involved. No wonder why Tesla's had to cut prices so aggressive. I mean, consider this. If rates were just where they are today, and if you were to get a Tesla, a Model 3, Model Y that used to cost about $55,000, your loan today would be $844. Including insurance in that, you're well over likely $1,000 a month. Indeed, even the Model Y at some points in 2021 and 2022 when rates were lower, we're going for $65,000, not 30. Double that. $65,000, your payment today would be almost $1,000. Of course, Tesla had to lower their cost of their vehicles, or they just wouldn't sell any vehicles, or definitely not as many. Tesla raising prices is one of 10 catalysts that I can see plausibly happening in 2024 that are not priced into Tesla stock. You got to remember, when you're thinking about what could positively affect a stock, what could negatively affect a stock, you have to think what is priced in. How to think of what is priced in is what is expected. And it's pretty simple. If you can ask the question and say, yeah, I don't think a lot of people are expecting that, it's probably not priced in to the stock in question, okay? Kind of like NVIDIA, just for an example. If you were to say NVIDIA is going to miss next quarter, Well, that's not priced in. It's pretty obvious to why that would not be priced into Nvidia, because Nvidia beats basically every single quarter for a while now. If you were to say Nvidia is going to beat on earnings, that's likely priced into the stock because they keep beating on earnings. Keep it so simple, it's stupid. Now, here are the 10 catalysts, or the top 10 catalysts that I put together in about 5 minutes that could actually happen in 2024 that are not priced into Tesla stock at all at this point. And considering it only took me about 5 minutes to come up with this list on my own, I forgot to put these in chronological order, but I'll tell you what's most important. So, number 1 on this list is better selling of the Model 3 in the US. I don't think there's anyone that's expecting the Model 3 to be some big success in the US, whereas you're seeing a lot of people talking about the Model 3 in the US, and you're seeing a lot of search trend activity on Google Trends. The Model 3 for months now has been the top searched Tesla model in the US. At the same time, Wall Street continues to say Tesla's products are stale, they've been around a long time. We just got the refreshed Model 3, and you might see quite a few orders coming in. And we don't get any weekly or monthly data on US deliveries, so we won't know until we know, when we actually get Tesla's delivery numbers. This could actually help offset some weakness that we might see in Europe and other markets. The second catalyst on this list is a smoother Cybertruck ramp than expected. Wall Street's expecting about 25,000 Cybertrucks to be delivered, and I think that could be a little bit low compared to the amount that we're starting to see. And the ramping process is exactly that. It's slow at first, and then whether or not it stays slow and kind of ramps slow, or it kind of starts slow and starts to ramp higher quicker, I think that is a potential positive catalyst that we could see in 2024. Also, I will mention a smoother and faster than expected Cybertruck ramp is going to be less of a cash burden for Tesla, and potentially a, impact to average selling price and positive impact to profitability. But that really depends on scale. As of right now, we expect the Cybertruck is costing Tesla money to manufacture, so they're not making any profits on the Cybertrucks that they are selling right now. Or if they are, it's likely break even at best. I think this next catalyst could be a big deal for Tesla stock, and that is a faster than expected start date for the Model 2. At this moment in time, you have to imagine the Tesla team is working as fast as possible on the Model 2, especially if their products are stale and demand is slowing down and the consumer is not in a great place. They want to get this lower priced variant of the Tesla lineup out to customers as soon as possible. Currently, we're expecting the Model 2 could launch in the second half of 2025. If that could get sped up to the first half of 2025, well, that could be a big deal for Tesla stock, because that means likely better growth rates are coming. Next catalyst is an overall halo effect. This is one of those things where it's going to take some time to play out, but by the end of 2024, we should know if the Cybertruck is starting to give a boost to the rest of the Tesla brand. This happened with the Model Y when the Model Y was introduced to the markets on March 13th of 2020. By the next year, the Model Y was, selling like gangbusters, and it had a positive impact on the Model S, the Model X, the Model 3, everything. But it took 1 year to actually start to see the material impacts of that halo effect. The Cybertruck's a more polarizing product. It gets people talking a lot more than the Model Y ever could. So could that speed up a halo effect? I would argue probably. Next catalyst up is FSD entering Europe and FSD entering China. We actually just got news today from Rowan Patel. He is with Tesla for their policy specialist, basically trying to get, the Cybertruck into China, or in this case, getting FSD into Canada. Apparently, that's going to be happening in just the next couple of weeks. That was the news that came out at 9 o'clock in the morning today. But we did get this news 2 days ago. It says Tesla is entering the next phase of autonomous driving in Europe. A significant development regarding regulation on driver control assistance systems at the United Nations Economic Commission for Europe paves the way for full self-driving beta program on the continent. So it looks like it's only a matter of time before FSD does enter the European market. It could be quite a big seller from what I hear from individuals that live in Europe that have bought Teslas. A lot of them already bought FSD, just waiting to use it. And there's a lot of people that say they will be a user of FSD when it actually does go to Europe. So it's only a matter of time before that happens, but also China. An FSD launch in China could happen at any moment. There was rumors it would happen in December or January, December 2023, January just 2 months ago of 2024. That indeed did not happen. I wonder why. There's been a couple different recalls around kind of the camera systems, operating systems. Probably China trying to just be 100% sure their data is not leaving China. That's what I would imagine. But again, some point in 2024, I would be surprised if we did not see FSD entering both Europe and the Chinese market. And that is definitely not priced in. FSD is probably going to be more successful in China and Europe than it actually is in the US. Whether or not people opt for the $199 subscription per month, or whether people opt to just pay for FSD outright in cash upon the purchase of their vehicle or to add it on after the fact, I think either way, that could be a material difference to Tesla's bottom line profitability. FSD, as we expect, is anywhere from 80 to 90% margins, considering all vehicles come with FSD hardware anyways. It's got to make sense to put the hardware into every single vehicle, even if 15% of vehicles, 10% of vehicles will ultimately get FSD in their lifetime. Just imagine that. The margins must be very, very good, and that could be an offset to some of the weakness that we might see. Again, cash burn from the Cybertruck, or maybe slower than expected deliveries in 2024. Overall, this would be a big positive catalyst for Tesla stock. I think Tesla may also start to talk positively about AI again. Just V12, Optimus. We got a little bit of that on the last earnings call, but then again, Elon said Dojo was a long shot and really threw cold water on a lot of their AI initiatives. And nowadays, Tesla is, well, they went from over-promising, under-delivering to not promising at all and delivering. I mean, FSD has made vast improvements over the last couple of years. Optimus in just the last 12 months has improved quite a bit. All Elon and the Tesla team would really have to, say is, they think Tesla's FSD could be the biggest FSD project in the world. It could be more valuable than NVIDIA. Dude, if you said that, you'd probably get a 3% pop in Tesla stock pretty shortly thereafter. At the very least, you could open up Wall Street's eyes to the AI potential that Tesla has. And I think that could be very powerful, and I expect that at some point in 2024. You could also get Tesla providing guidance. Like, for an example, Tesla did not provide guidance last quarter. If they come out this next quarter and they say, we have better visibility into the consumer, into the auto market, we're starting to raise prices in China, we're raising prices on the long-range variants of the Model 3 here in the US, demand is good, we can set a target for 2.2 million deliveries in 2024? Wow. Yeah, that would be fantastic news for Tesla stock investors, and it would probably cause the stock to rally over 10% in a single day. Do I think that's going to happen? I'm optimistic, but a lot of the time companies will not give guidance after they already said they're not going to give guidance. So I'm optimistic, but I don't think this is necessarily a home run like some of these other catalysts will likely be. Home run in terms of likely outcomes, statistical probabilities. I think this one's definitely on the lower side, maybe 20-25% chance, whereas all of these other ones are 50% odds or better, in my opinion, to actually happen in 2024. And last but not least, the Elon comp package with higher market cap tiers. One, the new comp package is going to solidify Elon as being the CEO of Tesla, likely until 2030, if not 2035 or 2040. That's going to be great news because I would speculate there's probably a 20 to 25% premium on Tesla, at least, just because Elon is the CEO. As much as people dislike Elon and talk crap about Elon, there's a hefty premium to Tesla stock just because Elon is the CEO. And if you've ever invested with Elon prior to Tesla, prior to anything else, you've pretty much always made money. Sure, he's had some things that did not exactly go as planned, but I mean, if you invested alongside what Elon does, you have made a lot of money. And I don't think people believe that's ultimately going to end now. And if Tesla starts throwing out market caps of 5 trillion, 10 trillion, 15 trillion, whatever the numbers are, anything over, 2 trillion really, would be seen as, wow, Tesla thinks they can actually grow the business to that size. Maybe it's worth allocating some more capital to the stock. Just for an example here, if Tesla could reach a, $2.5 trillion valuation, that would be a 500% return from here, roughly 500% return. If they could reach a $5 trillion valuation, that would be roughly a 10x from here. Those are not small returns from a large company, right? And Apple's not going to give you that. A Microsoft's not going to give you that. They would have to have some kind of huge home run. And, Tesla is a very stable, solidified company that can give you outsized returns, especially since the stock has fallen so much. The risk to reward looks very optimal right now. And that's why I am essentially FOMOing and buying as many shares of Tesla as I possibly can, because I don't think these catalysts are priced into Tesla stock. And even more specifically, I think if we do avoid a recession and the Fed starts to cut rates, which I will remind you is the consensus out there on Wall Street. So if the consensus is correct, that should be very good news for Tesla stock investors. Now, out of all of these catalysts, what do I think is most likely and what do I think will be the biggest benefit to Tesla stock? I'll tell you right now, the thing that I think is most likely, number one most likely, if I were to put my chips on one of these catalysts in 2024, it's actually the one that could be the biggest benefit to Tesla stock, believe that or not. You can't make this up. I can't make this up if I tried. It's actually Tesla raising prices later in 2024. Call it second half of 2024, beginning of 2025. As rates go lower, I am 100% confident personally that Tesla will raise prices. That will directly mean Tesla will be more profitable, which means the valuation is going to come down and Tesla is going to get cheaper. That's the in other words, EPS will go higher, right? And that's what the markets care about right now. So if Tesla does start raising prices second half of 2024 as the Fed starts to actually cut rates, first half of 2025, you will see a sharp rebound in Tesla stock. And I think Tesla just starting to raise prices and giving us some kind of guidance on raising prices, like if the Fed drops rates, we're going to raise prices. That's all Elon would have to say. And the stock would start to perform a whole hell of a lot better because we're all expecting rate cuts. But I do think this could be the single most important catalyst on this list, and I do think it's the highest probable catalyst on this list. The second thing that I think is most probable to actually happen is FSD entering Europe and China. I think it's very likely that this will happen, but I don't know how much of an impact it will immediately have to Tesla stock. I think it will be good, but not like Tesla raising prices, right? I also think Tesla could start talking positive on AI. Although that could be really positive for Tesla stock, it's not something I'm counting on. I do think the second most impactful catalyst for 2024 could be Tesla providing guidance. I think it's a very low probability relative to these other catalysts that happens, but it could be very impactful positively in the near term if it happens. And then Tesla talking positive about AI, I think this is roughly around 50% odds for 2024. So it's not 100% like I believe Tesla raising prices, but I believe it's roughly a coin toss that this will happen at some point in 2024, and that would also be positive if Tesla could be grouped into that AI category, not just the hardware category like Nvidia, like these semiconductors, but I think the the FOMO, if you will, the investment will change from hardware AI to real world AI. Because let's be honest, companies are only going to buy so many NVIDIA GPUs unless they're actually putting up some numbers from their GPUs that they bought. Meaning you're going to have to start seeing a lot of progress on Optimus, on FSD, from Facebook, from Microsoft, from these other companies, or they will slow down investments. I don't think that's going to happen necessarily. At least I think the overall trend is going to continue to grow for AI adoption. But you're going to have to start seeing companies putting up some real numbers behind AI to justify these investments. That's where I think the focus of investor capital will turn towards. Now, we don't have much for other Tesla stock news, but I'll give you a brief rundown of what we do have and what the data currently looks like with Google Trends, Tesla's advertising, and global inventories. The Tesla Model Y was Germany's best-selling SUV in February of 2024, which really does fly in the face of Tesla's demand slowing down. Martin Vischa, head of Tesla's investor relations, suggests that Tesla may start advertising more specifically to non-Tesla owners, prospective Tesla buyers, about range and how much range you actually need. Sawyer Merritt made this post. He says, I spoke in person today with a couple of people who work at a local Tesla store. One of them has been working there for 7 years. I asked them what the number one concern they hear from people who walk in is, and they said range anxiety. They added that people feel they need 500 miles of range. The average gas car doesn't have anywhere near that range, and chargers, especially in urban areas, are commonplace. Most people just charge at home anyways. Again, that's a good point. They also said many people think a Tesla starting price is $30,000 to $50,000 higher than it actually is. And Martin Vischa shared his post and said it's quite staggering that so many gas car owners are worried about charging in long trips, while the overwhelming majority of Tesla owners feel exactly the opposite. This is where education through ads makes sense, thus suggesting Tesla may really target their advertising a lot more to the range capacity of Teslas. And I think they should continue to advertise the affordability of Teslas now. A lot has changed in the past 2 years. Martin Vischa says that the Tesla team brought a Cybertruck to the Morgan Stanley TMT conference in San Francisco yesterday, and people seem to like it quite a bit. And yeah, you could see people taking pictures of the Cybertruck. Google Trends data is falling a little bit for the Tesla lineup, which is common heading into a weekend. It's really by Monday we should get some more, finer data here. You do have the Model 3 seeing the smallest drop from 37 to 36, the Model Y going from 34 to 31, the Cybertruck going from 29 to 28, and the Model X staying right at about 10. Overall, very strong search trend activity that you have seen for the Tesla lineup, specifically the Cybertruck. A lot of organic search trend activity is starting to come through for the Cybertruck. Tesla continues to run about 3,000 different ads with Google, lots of them being short form, and Tesla advertising the starting prices of the Model Y as well as the Model 3 being low, which is, again, something a lot of people need to hear. So I think Tesla is advertising the right things. I don't exactly believe Tesla is advertising in the right places. I do think the best dollar for dollar return on advertising is likely on cable television. Believe that or not, I think a lot of people that are watching cable television for a majority of their day these days, probably not Tesla owners. They might be a little bit older, a little bit less tech savvy, right? They probably don't know what a Netflix is. Though, well, maybe that's a little dramatic. I think everyone at this point knows what a Netflix is. But I do think that is the place that could really benefit the most from seeing Tesla ads. Like here in Michigan, nobody knows how much a Tesla costs. Nobody knows how much range a Tesla gets, or how much would be good, or how much range they would need. If you ask someone how much a Tesla costs, they're going to say $100,000. Like, that's what people tell me. And I say, no. Tesla's sentiment currently on StockTwits is at 31. Yesterday it was at 71. So today you're bearish. Yesterday you were bullish, which is common to see on a weekend. It's Saturday. Even shout out to you guys that are watching this video trying to better your financial future, even if you got kids screaming in the background and you don't want to hire a babysitter because you like to spend time with them even though they get on your last nerves. Message volume is still high at 56. Yesterday it was at 66. Again, it is the weekend. That is common. Participation ratio is the same as yesterday at 55. That is good news, meaning more people are talking about Tesla stock. Option activity last week from hedge funds and institutions totaled $6.32 billion with a positive order value of 62% in Tesla stock with 5,070 different trades. On Friday, option activity from hedge funds and institutions was notably on the bullish side, even though Tesla stock was down almost 2%. You had 686 orders totaling about $810 million with a positive order value of 63%. Let me know your take on all of this information. Out of that list of 10 different catalysts for 2024, what do you think is most likely, and when do you think Tesla stock starts to perform better? I'll tell you right now, when one of those catalysts happens, just one of them happens, I think Tesla stock starts to do a little bit better. And besides that, I think Tesla starts to do a little bit better after we get a correction in the markets and you do get closer to interest rate cuts and we get more clarity on it, whether the economy is tilting into a recession or if we're actually going to get this soft landing. Because on one hand, the markets are pricing in this soft landing. Everyone is counting on this soft landing. At this point, that is consensus. You are a real contrarian if you think a recession is coming. Yet you look at interest rate sensitive names, stocks like Tesla, and they are getting absolutely no love. In theory, if you do have a soft landing and rates do come down, Tesla stock should benefit from that. In theory, you don't want to see more cuts, but a recession. I mean, you want to avoid a recession at all costs if you are a Tesla stock investor, right? If you're someone hoping Tesla stock goes higher, a recession is not going to be good. Whether we get 3 cuts or 10 cuts, that doesn't matter. What's important is recession or no recession. I would take 3 rate cuts in 2024 and no recession rather than 10 rate cuts and a moderate recession. I don't know, maybe that's just me and there is some strange things going on in our markets. We will discuss those strange things in the next video, so stay tuned to the channel for that one and the odds of a crash that could be coming next week. Let me know your opinion on all of this information. If you guys want to come trade with us, check out that link down below in the description of this video. Fantastic place to be. You'll learn a lot and hopefully make a lot of money as long as you follow risk management strategies and protocols that we like to employ over there. You should do just fine, and yeah, maybe make a couple friends along the way. Come join that link down below in the description of this video if you would like. Also, go ahead and follow the X account. It is Michael Tyler over there. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.